Hello, my dear students of class 12th. Today, we are going to start the first chapter of accountancy in class 12th, accounting for share capital. It is not the first chapter of accountancy as per the syllabus because we have three books in accountancy. Three books in accountancy. First, financial accounting for NPO and partnership. Second, this accounting for companies. And third is analysis of financial statement. So today we are going to start this second book or volume 2 for the accountancy, that is accounting for companies. And in this we are starting the first chapter, that is accounting for share capital for the session 23-24. So this is part 1 of this accounting for share capital, as it is a very huge chapter and we have to understand it very deeply so that we can make all the questions that are coming in our board exams related to this chapter. First, let me give an overview of this book to you. That is, as we know, there are three books in the accountancy in class 12. The first book is accounting for partnership and NPO, which contains total 36 marks in the exam. Now this book comes, that is accounting for companies. This contains 24 marks. And the third is analysis of financial statement. This book contains 12 marks. One more chapter is there in this, that is cash flow statement. That contains 8 marks. So the third book contains total 20 marks. So first we are securing these 24 marks, as this book is only having two major chapters. First is accounting for share capital. Second is issue of debentures. As in the last session, there is one topic which is called redemption of debentures. This topic was deleted in the last session, but let us see the in the upcoming session of 22-20, sorry, 23-24, this is included or not. We will get in touch with this chapter later. But these two chapters are compulsory in the last session also and in this session also. So we are starting with this first chapter, that is accounting for share capital. Understand about this chapter, let's start with understanding about what a company is. So meaning and definition of a company. A company or a joint stock company is an association of persons formed and registered under Companies Act. It is a legal person not having physical existence and has a separate legal entity. Means a company is an association of person. What do you mean by association of person? Association of person means persons who come together to do a common business or have a common goal and have one objective of making money. So if such kind of association person starts a business and get that business registered under Companies Act, it becomes a company. And as the company is a legal person, that's why it is not having a physical existence, but it has a separate legal entity, which means it is different from its members. Means company is a separate entity and its members are different from its entity. Means their existence is different and the existence of company is different. Now, according to section 2 subsection 20 of Companies Act 2013, company means a company incorporated under this act or any other previous company law. Here the Companies Act wants to say that a company becomes a company which get incorporated or registered under Companies Act 2013 or any other previous company law, that is Companies Act 1956. Before 2013, means August 2013, the Companies Act 1956 was in force, but after August 2013, a new Companies Act started to enforce in India, that is Companies Act 2013. One professor also gave that definition about company, that is, according to Professor Haney, a company is an artificial person created by law having a separate entity with a perpetual succession and a common seal. So these are all the meaning and definition of company. You have to remember these two definition for your exams so that you can get a good marks in accounts. So this is all with the meaning and definition of accounting, and these two definition, which one which is given by the Companies Act 2013 and other given by the Professor Hene, is a very are very important definitions, and you have to remember both these definitions for your board exams, so that if question comes for writing any kind of short note about the company, you can write these two definitions and get good marks in this subject or in this topic. Now let's come to the characteristics or features of company. First characteristic of company is incorporation. Incorporation means the another name of incorporation is registration. So a company is an artificial person created by the process of law, that is Companies Act. As we already seen in the definition that company is an artificial person as it is a legal person and it is created by law and not having a physical existence. So the first feature of company is incorporation, means it is a company created by law, that is Companies Act, and this Companies Act can be Companies Act 2013 or Companies Act 1956. Now second characteristics of company is separate legal entity.
Means a company is an artificial person having a separate legal entity from its shareholders. Means the company and its shareholders are different from each other. The actions of company does not affect shareholders and the actions of shareholders does not affect the company. Now third characteristic is artificial person. As the company is created by the law, so it become automatically becomes an artificial person. In the eyes of law, it is an artificial person. It can own a property, enter into contract, conduct business, sue or be sued for its debt and actions. Means being an artificial person created by law, a company can enter into any kind of business, it can own a property, it can sue anyone or be sued for its debts and actions. Means we cannot say company is an artificial person, so we cannot sue him, or it cannot purchase any kind of property, or it cannot be enter into any kind of contract. It is an artificial person, and all these powers of getting into any kind of contract, owning any property is given by law to a company. Now, fourth characteristic is perpetual succession or perpetual existence. A company has a perpetual succession, that is, its existence is not affected by the death, lunacy, bankruptcy of its members or shareholders. Means, being an artificial person, a company is also having a perpetual existence. If anything happens to its shareholders or members like death, lunacy, bankruptcy, it does not affect the life of the company. Company will go on till means a company will go on till it's winding up. None of the happening to the shareholders or members is going to affect the life of or existence of the company. Now, fifth characteristics of company is limited liability. Liability of its members is limited to the value of shares subscribed by them or amount guaranteed to be paid at the time of winding up of the company, limited by guarantee. This means the liability of the members of the company are limited up to the amount guaranteed by them or the value of shares they have subscribed. There are also unlimited companies present in the market, but they are not present in India. Not present in India. So we are not going to learn about these unlimited companies. Only limited liability companies are present in India. But for your information, I am telling you that unlimited companies are also there, but these type of unlimited companies are not present in India. So the for India, we can say that the liability of the members are limited up to the value of shares they have subscribed or the amount guaranteed by them. The sixth characteristics of company is transferability of shares. Shares of a company are freely transferable in case of companies listed on the stock exchange. Means the shares of the company can be freely transferable between the persons to person if the company is registered under the stock exchange. If the company is not registered under stock exchange, its shares cannot be freely transferable. It will be transferred only after seeing the rules under the AOA, that is Article of Association. It is a very important document for the company. The about this document we are going to deal later. So for your understanding, I am just telling that if the company is not listed in the stock exchange, then their shares are transferred according to the rules of Article of Association, one of the major or very important document of a company. So the seventh characteristics of company is Management and ownership. A company is not managed by all the members but by the elected representatives called directors. It is just like our parliamentary system where we elect our parliament members who represent us in the parliament and take decisions regarding our benefit. Likewise, members of the company also elect their representatives called as directors, and they go there for the management of the company and to take necessary decisions related to the company. So, by this we can say that management and ownership are separate from each other in case of company. Now, eighth characteristics of company is common seal. A company may or may not have a common seal. Common seal means if, as we know, company is an artificial person and it can enter into any kind of contract and it can purchase any kind of property, and for that it needs to sign. But as it is an artificial person, it is not having any kind of hand, so it cannot sign. That's why they create a common seal which is used everywhere for getting into any kind of contract or purchase any kind of property. But it is not compulsory that company can have a common seal. But if a company is having a seal, it is important to affix it everywhere in the documents of the company. So all these are the characteristics of a company. And in the second part, we are going to discuss about the difference between partnership and company. So let's meet in the second part. Thank you so much for listening, and please like, share and subscribe my channel. And if you like my teaching and also need any kind of improvement, then please do comment in the comment box so that I can improve more. Thank you so much. Thank you for listening. Meet you in the next part. Goodbye.